we got a request from a listener to check out this YouTube video by Simon Squibb.
Simon Squibb.
Yeah.
You know him.
The name rings a bell. Refresh my memory.
Oh, he's only built like 19 companies and invested in something like 78 startups.
Oh, wow. Yeah. Okay, so he probably knows a thing or two about business.
That's what I'm thinking. Plus, he throws out this crazy question right at the beginning, asking like, what if the education system is actually designed to, like, hold us back?
Hold us back from what?
From freedom and control, like being truly independent.
Interesting. I can already tell this is going to be a good one.
So the video covers a ton, from starting a business all the way to selling it. Where do you want to start?
Well, I think it's interesting that he jumps right into debunking the myth of the original idea.
Yeah.
Like you need to come up with something completely new to be successful.
Right, like that's always what we're told.
Right.
Exactly, but he built his agency, Fluid, with 500 competitors already in the market.
So what's his secret then? If it's not about having a brand new idea, what's the key ingredient?
He's all about passion. You got to find something you're obsessed with, something you could spend hours doing without getting bored.
Makes sense. So find your passion and then just go for it.
Well, he does add one important caveat. You shouldn't try to do everything yourself.
Oh, right. Delegation and all that.
More like finding partners with complementary skills, people who are good at the things you're not.
Oh, so like building a team from the start.
Exactly. He partnered with a visual designer because that wasn't his strength, and they launched Fluid as a 50-50 partnership.
Okay, interesting. I think that's something a lot of entrepreneurs struggle with,
Yeah.
Like thinking we have to do it all ourselves, especially at the beginning.
Absolutely. And speaking of things we're told to do, he also challenges the traditional business plan.
Really? How so?
He suggests mind mapping instead.
Mind mapping, what is that?
Basically, it's a more visual and flexible way to plan your business. Instead of this rigid document, you create a web of ideas.
So more like brainstorming.
Yeah, exactly. You start with your central passion in the middle, and then you branch out from there, exploring different aspects of the business, like marketing, sales, product development, all that stuff.
I like that. It feels less restrictive, more organic.
It is. And it allows your plan to evolve as your business grows.
Now, that's something I can get behind. So you've got your passion, you've found your partners, you've got your mind map. What's next?
Well, Squibb had a really unique revenue model in the beginning. He didn't charge hourly rates.
Interesting. So how did he make money?
He charged based on the outcomes he delivered. Like if he helped a company increase their sales, he'd take a percentage of those sales.
Wow, that's pretty bold. Did it work?
Clearly, because
Oh.
he's built 19 companies.
True. It's a really smart way to align your success with your client's success.
Absolutely. And it shows a lot of confidence in his abilities.
Totally.
Yeah.
And beyond all the practical stuff, he's really passionate about the importance of purpose.
Yeah, he believes every business should exist for a reason beyond just profit.
I think that really resonates with people these days.
He's not wrong. Purpose-driven businesses have a much easier time attracting talent and customers.
For sure. Okay, so you've got your passion, your partners, your flexible mind map, and a purpose-driven idea. How do you actually win in business? What's the magic formula?
Well, Squibb breaks it down into 3 key elements: delayed gratification, a strong moral code and company culture, and something he calls hacking luck.
Okay, let's unpack that, starting with delayed gratification. I feel like that's a tough one in today's world.
It is. He's talking about resisting the urge to cash in early, playing the long game.
So focus on building a solid foundation first.
Exactly. He uses examples like Facebook and Instagram. They spent years building up huge user bases before even thinking about making money.
It's a good reminder that success takes time.
Exactly. And patience.
All right, what about this strong moral code and company culture?
He's a big believer in building a company that people are proud to be a part of.
So treating employees well, being ethical.
All of that. It's about integrity and building trust with your employees, your customers, everyone.
Makes sense. Okay, last one. Hacking luck. Can you really hack luck?
He doesn't believe luck is totally random. He sees it as something you can cultivate.
I'm intrigued. Tell me more.
He breaks it down into 3 actions: persistence, knowing your destination, and taking calculated risks.
Persistence makes sense, but what does he mean by knowing your destination?
It's about being crystal clear about your goals, your vision for the business. Where are you trying to go?
Oh, okay, so persistence, clarity, and a bit of calculated risk-taking.
That's the recipe for hacking luck, according to Squibb.
Interesting. And I bet that ties into his perspective on failure.
It absolutely does. He actually encourages us to get comfortable with being a D student sometimes.
Wait, a D student?
He's not saying to aim for mediocrity, of course.
Okay, good.
It's more about embracing experimentation, being willing to make mistakes, and learning through doing.
So, like having a growth mindset.
Exactly. He argues that this approach can lead to more innovation and ultimately greater success in the long run.
I like that. It takes the pressure off of being perfect all the time.
Right. It's more about learning and growing from your mistakes.
Now, before we dive deeper into Squibb's approach to finding your purpose, let's rewind a bit to that practical tool he mentioned for mapping out your business.
Ah, yes, the mind map. He suggests starting by placing your central passion, the heart of your business, right at the core of the map.
Makes sense. So from there, you branch out, exploring different aspects of the business.
Exactly. For instance, he mentions that his mind map for Free Humanity included branches for podcasts, app development, network building, and even merchandising.
So it's like a visual brainstorming session, helping you see the big picture and the connections between different parts of the business.
Precisely. And the beauty of it is, it's dynamic, always evolving as your business grows.
Much less rigid than a traditional business plan.
Definitely. Now, once you've got a sense of the structure, he emphasizes getting really clear on your purpose. This is like the heart and soul of any successful venture, right?
Absolutely.
Okay.
And I'm guessing he has some insights on how to do that.
He does. He starts with a simple but powerful question. What problem do you want to solve? It's not about what you want to do, but about what impact you want to make.
That's a great point. It's about identifying a need in the world that resonates with you, something you feel compelled to address.
He encourages some serious self-reflection here, really thinking about your core values and the issues you care about most.
It's about finding that sweet spot where your passion and a genuine need intersect.
And don't get overwhelmed thinking you have to solve all the world's problems yourself.
Right, like start small.
Exactly. He actually encourages finding your tribe, collaborating with others who share your passion.
That's a good point. There's power in collective action.
He also reminds us that aligning with our purpose doesn't have to mean this huge life overhaul. You can adapt your existing skills and experience to serve a new mission.
So like repurposing what you already know how to do.
Exactly. And if you are working for someone else but feeling that pull towards a more purpose-driven path, don't be afraid to ask for equity.
That's a good point. You deserve to be compensated fairly for your contribution, especially if you're pouring your heart and soul into it.
Absolutely. Now, speaking of finding the right people, Squibb is a big believer in the power of partnership, especially when it comes to finding a co-founder.
I've heard that having a co-founder can be make or break. What's his take on it?
He makes a great analogy, comparing it to having a gym buddy. You're much more likely to stick to your fitness goals if you have someone to hold you accountable and motivate you.
So a co-founder is like your business gym buddy. I love that.
Right. Someone to support you, challenge you, keep you on track.
But what about the common fear of giving up 50% of your company? That's a big deal for a lot of people.
He addresses that directly. He says he'd much rather have 50% of a successful business he loves than 100% of a nightmare he has to handle alone.
That's a great way to look at it. It's about prioritizing quality of life and shared success over absolute control.
Exactly. Now, finding the right co-founder, that's the tricky part.
I bet he has some tips on that.
He does. He says it starts with being honest with yourself about what you love to do and what you hate to do.
So figuring out your strengths and weaknesses.
Exactly. Then you look for someone who complements you in those areas.
Like finding the missing piece of your puzzle.
Precisely. But it's not just about skills, it's also about finding someone who shares your moral compass.
Shared values are so important, especially in a business partnership.
He even suggests a thought experiment to gauge someone's integrity. Imagine being offered a life of luxury and success for 40 years, but then everyone finds out you're a fraud. Would you take it?
Whoa, that's a deep one. It really makes you think about your priorities.
He believes it reveals a lot about someone's character.
Okay, so once you know what you're looking for in a co-founder, how do you actually find them?
Tell everyone you know, put it out there on LinkedIn. Be actively on the lookout.
So network.
And when you find someone who seems like a good fit, be upfront about expectations and set up a fair equity structure from the start.
Transparency and communication are key in any partnership.
Absolutely. And speaking of business partnerships, are you ready to move on to the art of selling?
Let's do it.
Yeah.
I'm curious to hear his approach to making those deals happen.
So Squibb, he kind of throws out the old sales playbook.
Oh, really? How so?
Well, he says it's not about, like, pushing your product or service. It's about selling the sizzle, not the steak.
Ooh, I like that. Okay, I'm listening. What's the sizzle in that scenario?
It's the experience, the feeling, the transformation your product or service offers.
So like tapping into the emotions, the aspiration.
Exactly. It's about connecting with the customer on a deeper level.
This is making me rethink my whole approach to sales.
I know, right? It's powerful stuff.
Now, there was something else he said that I found really interesting. His accountant was his best salesperson. How does that even happen?
He empowered her to sell. He shared the impact Fluid had on its clients, the stories of businesses they'd saved, the growth they'd fueled.
So she really understood the sizzle, as he calls it.
Exactly. She could communicate it authentically and passionately.
That's brilliant. It shows that anyone can be a salesperson if they truly believe in what they're selling.
Now let's break down his 3-step sales process.
Okay, shoot.
It starts with understanding your customer. Seems obvious, right?
Yeah, but I think it's easy to get caught up in your own pitch and forget to actually listen.
Exactly. Take the time to research your prospects, understand their challenges and tailor your approach accordingly.
So, step 1, know your customer. Then what?
Step 2, build a genuine connection. It's about building that know, like, and trust factor.
Right. People buy from people they like.
He takes it even further, though. He asks, do you actually like this person? Would you enjoy working with them? Oh, wow. So it's not just about closing any deal, it's about building the right relationships.
Exactly. Forcing a sale with someone you don't resonate with will only hurt you in the long run.
I like that. It's about quality over quantity.
Okay, so you've done your research, built rapport, you feel good about the potential partnership. How do you actually close the deal?
That's the million-dollar question.
His advice here, patience.
Patience, really.
He's all about the long game. Don't give up after 1 or 2 attempts.
So stay in touch, nurture the relationship.
Exactly. He actually shared a story about how it took him 9 years to land some of his biggest clients.
9 years. Wow, that's dedication.
He consistently reached out, provided value, and stayed top of mind.
It's a good reminder that sometimes the best things take time.
Absolutely. All right, ready to tackle marketing.
Let's do it. It's such a big topic, though. Where do we even start?
He acknowledges that it's complex, but he also insists that it can be fun.
Fun. That's not a word I usually associate with marketing. I know, right? But he encourages us to approach it with a sense of playfulness, Experiment. Try new things.
I like that. Less pressure, more creativity.
And just like with sales, it starts with understanding your customer. Who are you trying to reach? What are their needs?
It's about building those relationships, right?
Exactly. Now, here's where he introduces a really cool concept. He calls it the staircase philosophy.
The staircase philosophy. Okay, I'm all ears.
He illustrated this with a story about buying a staircase in London.
The staircase? What does that have to do with marketing?
It was a unique opportunity, something that generated a lot of buzz.
Ah, so like a publicity stunt.
Kind of.
Yeah.
He didn't even have a specific plan for it, but he knew it symbolized something about his business, like taking things step by step to reach your goals.
So he turned a staircase into a marketing opportunity.
I love it. He even put a blimp on top of it and installed a doorbell where people could pitch their business ideas.
Wait, seriously? That's amazing.
It was playful, interactive, and it definitely got people talking.
So what's the takeaway for the average entrepreneur who doesn't have a giant staircase lying around?
He challenges us to find our own staircase. What's that unique element, that quirky story, that unexpected angle that will make your business stand out?
I love that.
Yeah.
It's about finding your differentiator, that thing that makes you memorable.
Exactly. And with so many marketing channels out there, it can feel overwhelming.
It really can. How do you know where to focus your energy?
He advises choosing a few key channels and then building systems to manage them effectively.
So like if you're focusing on social media, have a system for creating content, scheduling posts, all of that.
Exactly. It's about streamlining your efforts and focusing on quality over quantity.
Systems and processes, that's what separates the pros from the amateurs.
And here's another important tip. Don't force yourself to do marketing activities you hate.
Oh, that's a good one. There are definitely some marketing tasks I dread.
He says, if you hate being on camera, don't make yourself do videos. Find the channels that align with your strengths and your personality.
It's about finding the marketing activities that feel authentic to you.
Exactly. Now, let's move on to a topic that can be really intimidating for a lot of entrepreneurs. Securing funding.
Yeah, that's a big one. Where do you even begin?
He breaks down a variety of options, from bootstrapping to venture capital, And he starts with bootstrapping, which is basically self-funding.
I'm a big fan of bootstrapping whenever possible. It allows you to maintain control and forces you to be resourceful.
He agrees, but he acknowledges that it's not feasible for every business. Sometimes you need an infusion of cash to scale or seize an opportunity.
So what are the other options?
Well, there's family and friends, which can be a good option in the early stages.
It can also be a bit tricky to navigate.
He's adamant about transparency and honesty here. Be upfront about the risks involved, Make sure they understand they could lose their investment.
Protect those relationships, even if it means having some difficult conversations.
Absolutely. Now, if you're looking beyond family and friends, angel investors can be a good option.
Angel investors, those are the individuals who invest their own money in startups.
Right, exactly. And they often bring more than just capital to the table. They can offer mentorship, connections, and valuable advice.
So it's like finding a strategic partner, not just a source of funding.
Exactly. Now, his approach to pitching to angel investors is really interesting.
Okay, tell me more.
He says, don't ask for money, ask for help.
Don't ask for money, ask for help. Interesting. I like that.
He believes that framing it that way helps you find investors who are genuinely invested in your success, not just looking for a quick return.
It's about finding people who align with your vision.
Now, if you're aiming for even bigger growth, there's venture capital.
VC funding, that's the big leagues.
It is, and it's typically for businesses that are already showing traction and have a clear path to rapid growth.
So you need to have a solid track record and a compelling pitch.
Exactly. VCs are looking for those hockey stick growth curves and massive returns.
High risk, high reward.
Exactly. And he highlights the importance of understanding the VC's portfolio. If they've already invested in a competitor, they might not be interested in funding you.
Good point. It's about doing your research and targeting the right investors.
And it's not always about traditional funding. He actually had a client who offered to fund Fluid's expansion into the Middle East.
Wow, that's amazing. So sometimes funding can come from unexpected places.
And then there's crowdfunding, which has become increasingly popular.
Crowdfunding, that's where you raise money from a large group of people, right?
Exactly. There are different types, including equity crowdfunding, where investors get a piece of your company, and rewards-based crowdfunding, where they get products or experiences in exchange for their contribution.
I've seen some really cool businesses launch through crowdfunding.
It can be a great way to get your business off the ground and build a community around your brand.
What about sponsorships? Are those worth exploring?
Absolutely. They can be a fantastic way to gain exposure, reach new audiences, and potentially even generate revenue.
Yeah.
But he's very clear about approaching them strategically.
So it's not just about sending out a bunch of emails and hoping for the best.
Sponsors are looking for a return on their investment, whether that's brand awareness, increased sales, or alignment with a cause they care about.
You need to articulate the value you can offer.
Exactly. He shared a story about struggling to get sponsors for his coaster ads venture.
Coaster ads? What's that?
He was placing ads on coasters in bars. It seemed like a brilliant idea.
I can see that.
But he initially targeted the wrong brands. He tried to pitch a jewelry brand on advertising on beer coasters.
Oh, no. That's not a good fit.
Not at all. It's a good reminder that we need to really understand the brand values and target audience of potential sponsors.
Find that alignment to create a win-win partnership.
And sometimes it's more effective to go through media buyers or agencies rather than directly to the brand.
Oh, interesting. So they're like the gatekeepers.
In a way, they often manage advertising budgets and are looking for unique opportunities.
It's like having an advocate within the company.
Exactly. Now, before we move on to building a lasting brand, he emphasizes the importance of personal investment.
Personal investment? Meaning what?
He shared a story about how his genuine love for the Ring doorbell led to a partnership with Amazon.
So, like, authentically aligning with brands you believe in.
Exactly. It can open doors in ways you might not expect.
Okay, ready to dive into building an enduring brand.
Absolutely. That feels like the ultimate goal for any business, right? Creating a brand that truly stands the test of time.
When you build a business with a strong purpose, hiring becomes so much easier. You're not just looking for employees, you're looking for people who believe in your mission.
It's about finding people who are intrinsically motivated by the work itself, Like they'd be doing it even if they weren't getting paid.
Exactly. He even suggests checking their social media. See what causes they support, what they're passionate about outside of work. Oh, that's a smart idea. It gives you a better sense of their values, if they're truly aligned with your company culture.
Right. Okay, so you've hired those great people. How do you create a culture where they can thrive?
That's the big question. How do you keep those rock stars happy and engaged?
Squibb's a big believer in giving employees equity in the business.
Oh, interesting. So they have a real stake in the company's success.
Exactly. It aligns everyone's interests, encourages them to think like owners.
I like that. It's about sharing the rewards and fostering a sense of ownership.
And as your business grows, it's important to stay focused on your destination.
Your destination, meaning what?
Why are you growing? What's the ultimate goal? Is it financial freedom?
Yeah.
Making a social impact? Building a legacy?
It's about being intentional with your growth,
Yeah.
making sure it aligns with your values and aspirations.
He even challenges the assumption that bigger businesses are inherently more complex and stressful to run.
Really? I feel like that's the common belief.
He argues that in some ways it can actually be easier because you have more resources, a more robust infrastructure.
Interesting. I hadn't thought of it that way.
Now here's a question I know a lot of entrepreneurs struggle with. How do I find a mentor?
Oh, yeah, that's a big one. Everyone's always looking for that perfect mentor.
Squibb actually has a bit of a controversial take on this.
Oh, really? What does he say?
He believes that what most people actually need isn't a mentor, but rather someone who can answer specific questions, provide targeted guidance.
So instead of looking for a general mentorship relationship, be clear about your needs and find experts who can address those specific areas.
Exactly. Leverage online platforms, connect with people who have the knowledge you need.
It's like having a whole network of mentors at your fingertips.
Now, if you're really set on finding a traditional mentor, he does have some tips.
Okay, I'm listening.
Start by doing your research. Understand their background, their values, their areas of expertise.
So make sure there's alignment.
Exactly. And instead of asking, "Will you be my mentor?" which can feel like a big commitment, ask for specific advice or guidance.
Make it easier for them to say yes.
Also, connect with people in their network. Referrals can be incredibly powerful.
It's all about those warm introductions.
And lastly, remember to give value to the person you're seeking mentorship from. Offer to help with a project, share your skills, express your appreciation.
It's about building a genuine relationship, not just taking.
Exactly. Okay, ready to tackle equity?
Sure. It's a topic that always makes my head spin a little.
I know, it can be confusing. But Squibb starts by debunking a common myth that dropping below 50% equity means losing control of your company.
Wait, really? I thought that was the magic number.
He explains that control is actually determined by the shareholder agreement, not just the percentage of ownership.
Oh, that's an important distinction.
He also stresses thinking long-term when structuring your equity. If you plan to raise multiple rounds of funding, you don't want to give away too much too early.
So be strategic with how you allocate equity.
And don't give away small percentages to too many people. It dilutes ownership and creates a messy cap table.
A messy cap table.
It's basically an outline of who owns what percentage of your company. A messy one can scare off potential investors.
Oh, okay. So keep it clean and simple.
And remember to align your equity structure with your brand values. If you're building a socially responsible business, you might consider giving equity to employees or even a nonprofit.
Equity as a tool for social good. I like that.
All right, last but not least, let's talk about selling your business.
Okay, the exit strategy.
Squibb has a really interesting piece of advice here. The best way to sell your company is to not want to sell it.
Wait, why would he say that?
He believes that when you're truly passionate about your business and not actively seeking an exit, you're in a stronger position. You're not desperate, you're more likely to get a better deal.
So build something you love, something you'd be happy to continue running.
Exactly. And if an acquisition opportunity comes along, you can approach it from a position of strength.
That makes sense.
Yeah.
What about building relationships with potential acquirers? Is that a good strategy?
He recommends it. Demonstrate the value of your business. Show them why you'd be a valuable asset.
Play the long game.
Exactly. And when you're ready to explore a sale, there are different exit strategies. Working with business brokers, merging with a competitor, even selling to your own management team.
So explore your options and find the path that aligns with your goals.
Exactly. He encourages entrepreneurs to really think about what they want their future to look like.
Wow, what a deep dive. This has been incredibly insightful. I feel like I have a whole new perspective on building a business.
Me too. Simon Squibb really packed a lot of wisdom into that video.
He did. So if you had to pick one key takeaway for our listener, what would it be?
Build a business you love, one that aligns with your purpose and brings you joy. When you do that, everything else falls into place.
That's a beautiful message to end on. Listener, we hope you enjoyed this deep dive into the world of entrepreneurship. Now go out there and build that dream business. We'll be here for your next deep dive when you're ready.